Hey everyone, welcome back to the channel. Today we are going to walk through a 4-job costing example for a company called Nova Custom Furniture. We will start from raw materials, go all the way to COGM, COGS, and even adjust under applied overhead. This is perfect if you are studying managerial accounting, writing the CPA exams, or you just want job costing to finally make sense. Let's jump in. Nova Custom Furniture uses a normal job order costing system. That means we apply manufacturing overhead using a predetermined rate, not the actual overhead. In August, we worked on 4 jobs: J101, J102, J103, and J104. Overhead is applied based on direct labor cost and the company sales completed jobs at a 40% markup over total job cost. So our goal is to track the costs for these jobs and see where they end up: work in process, finished goods, or cost of goods sold. Here are the 4 jobs for August. J101 and J102 both had opening work in process from last month's $4,000 and $6,000. J103 and J104 are new jobs that started this month, so they have no opening balance. During August, each job used some direct materials and direct labor, and at the end of the month, J101 is sold, J102 and J103 are completed and sitting in finished goods, and J104 is still in work in process. Their job status is really important later when we calculate ending work in process and COGM. Because this is a normal costing system, we don't use actual overhead to price jobs. Instead, we use a predetermined overhead rate that was calculated at the beginning of the year. Nova budgeted $500,000 of manufacturing overhead and $125,000 of direct labor cost. So the overhead rate is 500,000 divided by 125,000, which equals 4. That means for every $1 of direct labor cost, we apply $4 of overhead to the job. Now we take that rate and apply overhead to each job. Job J11 has $4,000 of direct labor, so we apply $16,000 of overhead. J12 has $5,000 of labor, so it gets $20,000 of overhead. J13 gets $10,000 and J104 gets $4,800 of overhead. If you add those up, the total overhead applied to all 4 jobs in August is $50,800. On this slide, you can also see the totals for opening work in process, materials, labor, and overhead across all jobs. Let's put everything together and compute the total cost of each job. For J101, we start with the opening work in process of 4,000, then add 8,000 of direct materials, 4,000 of direct labor, and 16,000 of applied overhead. That gives us a total job cost of 32,000. For J102, the same idea: 6,000 opening work in process plus 15,000 of materials, 5,000 of labor, and 20,000 of overhead. That totals 46,000. J13 has no opening work in process, so it's just 12,000 of materials, 2,500 of labor, and 10,000 of overhead, for a total of 24,500. And our in-process job, J104, has 3,000 of materials, 1,200 of labor, and 4,800 of overhead, for a total cost of $9,000 at month end. Now we compute the COGM for August. The formula is beginning work in process plus current manufacturing cost minus ending work in process. Beginning work in process is the opening cost of J101 and J102, which is 4,000 plus 6,000, so 10,000. Current manufacturing costs include direct materials used of 38,000, direct labor of 12,700, and overhead applied of 50,800. Add those three and you get 101,500. Any work in process is the cost of the one job that's still in process, J104, at $9,000. So COGM equals 10,000 plus 101,500 minus 9,000, which gives 102,500. This amount represents the total cost of the jobs that were completed this month. Jobs J101, J102, and J103. Next, we have to deal with the fact that actual overhead is not equal to the overhead we applied. For August, Nova's actual overhead turned out to be 51,500, but we only applied 50,800 using the predetermined rate, so we are under applying overhead by $700. In other words, the jobs and the inventory balances are missing $700 of manufacturing overhead. When the difference is small, the common approach is close at directly to COGS. So at the end of the period we record debit cost of goods sold 700, credit manufacturing overhead 700. That increases COGS and closes the overhead account back to zero. Let's quickly summarize the key journal entries because this is where students often get lost. First, when we purchase materials, we debit raw materials and credit accounts payable for 40,000. Second, when materials are issued to production as direct materials, we debit work in process and credit raw materials for 38,000. Third, for direct labor, we debit work in process and credit wage payable for 12,700. Fourth, as actual overhead costs are incurred, things like utilities, depreciation, indirect materials, we debit manufacturing overhead for 51,500 and credit variance accounts, such as cash accounts payable and accumulated amortization. Fifth, when we apply overhead to the jobs using our rate of $4 per dollar of labor costs, we debit work in process and credit manufacturing overhead applied for 50,800. Once jobs are completed, we move their cost out of work in process and into finished goods. Jobs J101, J102, J103 are all completed this month, and their total cost is COGM amount of 102,500. So we debit finished goods and credit work in process for that amount. When job J101 is sold, we have two entries. First, to move the cost, debit the cost of goods sold, 32,000, credit finished goods 32,000. Second, to record the revenue at a 40% markup. Debit accounts receivable 44,800 and credit sales revenue 44,800. Finally, we adjust the under applied overhead debit cost of goods sold 700, credit manufacturing overhead 700. If you are a virtual learner, here's how the numbers flow through the T accounts. In raw materials, we start with 5,000, add purchases of 40,000 and subtract the 38,000 issued to production. That leaves an ending materials balance of 7,000. In work in process, we start with 10,000 of opening work in process and then add 38,000 of DM, 12,700 of DL, and 50,800 of applied overhead. That totals 111,500 flowing through work in process. We subtract COGM of 100, 200, 500, and we are left with 9,000, which is exactly the cost of job J104, the only incomplete job. Finished goods starts at 0, receives the COGM of 102,500, and then we remove 32,000 when job J101 is sold. So ending finished goods is 70,500, which is the combined cost of jobs J102 and J103. And finally, COGS has a job cost of 32,000 plus 700 overhead adjustments for a total of 32,700. So there's a full flow of costs in a normal job costing system, from raw materials to WIP to finished goods to COGS, including how to handle unapplied overhead and how COGM is tied to which jobs are completed. If you are studying for exams, my suggestion is pause the video here and try to build the schedule and the accounts yourself using those numbers. If this breakdown help you, please like this video, leave a comment telling me what topic you want next, and subscribe so you don't miss the next accounting walkthrough. Thanks for watching, and I will see you in the next one.